I'm Carl Quintanilla. You're listening to CNBC's Tech Check. Our show is live weekdays at 11 a.m. Eastern. Listen in. Good Monday morning. Welcome to Tech Check. I'm Carl Quintanilla with John Ford and Deirdre Bosa. Coming up on the show today, Chinese stocks fall as officials impose sweeping regulations, sparing no sector of the market. Plus, Bitcoin briefly breaks 39K with some help from Amazon and Robinhood, on pace for the best day now since May. And finally, Tesla kicks off a big week of earnings for tech. The chip shortage in focus while Giga Texas prepares for production D.
And welcome back, Carl. We start with the sell-off in Chinese stocks. The government cracked down on business, now expanding to edtech and food delivery, in addition to recent curbs on ride-sharing, music, fintech, and gaming. TAL and New Oriental Education both down more than 10% today after the government said it was looking to force after-school tutoring services to shift to a not-for-profit business model. Those are currently quite profitable models. Goldman Sachs forecasts such a move will shrink the market by 76%. Regulators also saying there that online food platforms must pay workers at least the minimum local wage. Shares of Meituan, the largest food delivery service in the country, did not take the news very well. And ride-sharing company Didi, take a look, just keeps getting clobbered, now down more than 40% since its U.S. debut on June 30th. This morning, Atlantic Equities downgrades the stock to neutral, saying the range of outcomes leave us unable to recommend the stock until there is more certainty. If you've been invested in Chinese internet stocks, take a look at the broad group. The ETF KWEB is down 28% in just a month. It is lower, has been underperforming all year. And guys, while some might be tempted to see this as a buying opportunity, that note really says it all. With China, it is really difficult to know, John, when regulators are satisfied or even the motives. We've been talking a lot about the personal data protections and the implications there, but part of this is political too, especially when it comes to those ed tech companies. There's been a lot of blowback, anxiety for students, costs for parents, the one-child policy now expanding.
Yeah, and Dee, that's a great overview. And Carl, as we look at this, it just reminds me of what we so often say, even with U.S.-based stocks, and the need for certainty around certain factors, whether it is regulation, government policy, what's happening in the global economy. With these Chinese stocks and businesses, it's just unclear, at least from where we sit here, what the end game and the overall driving philosophy from China and the Communist Party's perspective is. Who's in the line of fire? Who's on dangerous ground? And how do they get off of it, regardless of the ideological or political stance that you hold? As an investor, you sort of want to know that, right?
Yeah, I mean, Dee points out this downgrade of Didi over at Atlantic, John, and you can almost hear in the text of the report analysts themselves kind of searching for answers as to where this all ends. Although they did say, Dee, we keep our overweight on Baba and Tencent, where risks appear manageable and both could benefit from any near-term cooling in competitive intensity. But who knows when that's coming around, John?
Yeah, and so now let's bring in our Eunice Yoon, who joins us live from Beijing. Eunice, what's your sense? Is there a theme running through these announcements that we've seen that have had such big impacts on these stocks, perhaps closing a rich-poor gap, or at least trying to appear that wealthier entrepreneurs aren't taking over the narrative of the Chinese economy?
I think that would be an overarching theme that you are seeing in this effort. But I think also within each field, the purpose of these tactics are really very different and very specific. So, for example, what we're seeing right now in ed tech is an effort, the stated goal is to try to bring costs down for a lot of these parents. But now there's been a lot of complaints and debate about whether or not that's actually going to work. There are several parents who've been complaining and saying, actually, even though it sounds good that maybe this is going to help encourage us to have more children, it actually just makes our costs more expensive, because instead of paying for a class for after-school tutoring, now I might pay a private tutor to come to my home, which could be triple the cost. So then that's been raising a lot of speculation that perhaps among investors that perhaps the end goal there is about political control and trying to make sure that there isn't a whole lot of foreign influence in the education, or to have a lot of private ideas entered into the minds of the children in China. So that's that's one of the big questions there. But then you have something, for example, in the internet industry and unveiling different rules, and that's the end game could be different.
Exactly. And Carl references just a few moments ago, is there thinking the two elephants in the room, Alibaba and Tencent, the tech giants, of course, they have not been immune from the scrutiny, but is there a sense that perhaps for them at least, it's over, you do see them working more and more with the Chinese government, whether that be on digital coins or Ant Group, which is an Alibaba affiliate? You get the sense that they may be at the end of their rope in terms of the punishments that they could see?
It's very unclear because we keep hearing about all these different punishments. For example, over the weekend, Tencent, which up until only a couple of weeks ago, people were saying, hey, Pony Ma, the founder of Tencent, has been doing a good job, really laying low. He's known as being somebody who's very quiet and not very public on a lot of these issues, not critical of the government or anything like that. But now Tencent and then Tencent Music got punished over the weekend, slapped with a fine that was a minor fine, only about $80,000, but really driving home the point that these tech companies cannot have a dominant position, even in, for example, an area that's kind of growing and does have other competitors, such as live streaming music.
Yeah, well, we of course covet your insight as more of these actions take place and more news comes out. Eunice, thank you. Joining us now to weigh in with more on this, former Cisco Systems CEO John Chambers. John, you went through your share of headaches and trials over Chinese policy and regulation over at Cisco. How does this latest round of shifts and changes in regulations over in China look to you, and what do you expect the impact to be both on U.S. companies and markets? Let's see, do we have John's audio? Let's try to get John's audio back. Dee, the fact that Eunice was able to put some of this in context around the Chinese government trying to send a certain message to the mainstream and perhaps also assert control was interesting. I think we might have John Chambers' audio back. John, are you with us?
Thank you. My mistake at my end. It's great to be with you, with Carl and Dietra again. I've been doing business in China for 40 years. I'm on the 8th five-year plan that they have. The five-year plans actually say where they're going to go. For the first 30 years, it was a win-win mentality. I did a joint venture with Wang Laboratories there, the first one in the industry. At Cisco, even though negotiations were tough, it was always a win-win mentality. And as a whole, we worked through all the issues. The last 10 years have been a change. It's been more of a win-lose, and with the Chinese government wanting to influence more control, not only over the American high-tech companies operating in China, but the Chinese startups, et cetera. I think it will probably get a little bit tougher before it gets better. I think the real clear message is they are sending a message to their established companies and their startups. You've got to get our permission. We're going to give you certain guidelines in which you can play or not. And if you get out of line, we're going to bring you back into line very quickly. From my own perspective, as I shared on you last time we talked on this, John, I'm encouraging my startups not to do business in China, or I'm not invested in Chinese startups at this time. It's too unpredictable, as one of your guests said earlier, and I bet what's going to be the results 5 and 10 years out. Do I think this will eventually correct? Yes. I don't think it results in the type of Cold War that some other people referred to, but I think it will get bumpier before it gets better.
And so does it put Chinese companies at a disadvantage as they try to amass capital in order to compete on a global stage? Or is China just big enough that despite the fact that it might kneecap a company now and then to try to assert its control and message, the money that it's spreading around the world in order to garner influence is going to protect its companies as well?
It's somewhere between the two, John, and I think that's the right way to frame the question. On the positive side, they are going to be the largest economy. I think that's a given. Therefore, they have the economic strength to implement any one of several different scenarios. On the negative side, it will slow investors and be willing to share innovation and the concern about technology, intellectual property capabilities. So I think it will slow their tech industry and the growth. So it'll be interesting to see. The real winner in this is probably India, in terms of perhaps emerging into the best technology place to invest in Asia for new startups.
Hey, John, it's Carl. It's hard not to hear your comment about it getting bumpier and wonder what bumpier looks like. How do you think this gets inflated, and what would the effects be on, I guess, not just Chinese equities, but overall capital markets here, too?
Well, I think it's important to remember in China, whether you're a company or a government interfacing to China, predictability from the outsider's perspective is key. And I think the general rule of praise in public and criticize in private is very appropriate. In terms of the challenges, I think the challenges will make it more difficult for American tech companies in China. And I think it will be more difficult for the Chinese tech companies to move with the predictability you need. You know what it takes. It takes 10 years from the time you form a startup until you take it public. So I think the challenges will be there. Some of the other issues, which I think may be of interest, Carl, is cybersecurity becomes even more of an issue and more of a concern if a government exercises a large amount of control over their tech industry. And that's one of the reasons that I think cybersecurity is probably the second most hot issue in terms of technology growth in the market, and right behind artificial intelligence.
Good morning, John. It's Deirdre. Have you seen any indication that Beijing could turn its scrutiny towards American companies? Because it seems like the opportunity is still there, particularly for companies like Apple and Tesla that get a lot of their revenue, a lot of their growth from that market. And even when you look at how badly U.S. sanctions have hurt Huawei, another one of China's biggest companies, though not public, there was still no retaliation against Apple.
Well, I think it's in the U.S. and China's best interest on both sides to create a win-win. It slows both economies down if there's too much friction. I think the Chinese leaders are clearly sending a message they're going to exert influence over their own companies, but also the American companies in China. And I think the major thing for an American company doing business in China is it a reasonably level playing field? It'll never be perfectly flat, but is it reasonable? And are you pretty sure that you got your intellectual property protection in place? And is it worth the investment versus the unpredictability on the risk? It's why, as I said earlier, Dieter, for the first time in my career, 40-some years of doing business in China, I'm moving my investments in China to a back burner. A lot easier for a small investor to do that in a startup community, but it's not a trend you want to see on a larger scale.
A lot of people and companies doing that kind of recalibration, I imagine. John Chambers, thank you.
Thank you very much, guys.
We were talking about EdTech in China. Let's talk about EdTech closer to home. Duolingo, the language learning app scheduled to IPO this week, it just upped its price range from $85 to $95 to $95 to $100. $100 per share would imply a valuation of $4.6 billion. It is the top grossing app in the education category in both the Google Play and Apple app stores. Plans to list on the NASDAQ under the ticker DUOL. And we look forward to speaking with founder and CEO Luis von Ahn sometime after that goes public. Interesting guy, Dee.
Yeah, indeed. Looking forward to that. Meantime, take a look at Bitcoin. It is surging back. The cryptocurrency shooting higher over the weekend amid news, perhaps lots of news, but one of the pieces was that Amazon is looking for an executive to develop the company's digital currency and blockchain strategy. One report, though, takes it a step further. London City AM citing an insider claiming that the tech giant is even interested in accepting Bitcoin by year end and potentially developing their own token by 2022, with Jeff Bezos himself leading the charge. Remember, he hasn't stepped away, still executive chair. Not everyone, though, in crypto is heading to the moon. federal prosecutors announcing this morning that they are probing Tether executives. This is the stablecoin Tether for bank fraud, which we'll dive into later this hour, guys. There was a lot of headlines. One I want to mention as well is I don't want to put too much emphasis on the Amazon news, which is interesting and certainly could move the market. But there was also this piece from two of the most popular crypto platforms, FTX and Binance. They're curbing some of the leverage that traders are able to use, and that could ultimately lead to less volatility in these markets. Carl?
Yeah, John, I wonder what your thought was on that Amazon piece. I mentioned with Kramer earlier this morning, we haven't really seen it matched by any other news organizations. And I don't know, does it run afoul of what we know about Amazon's discipline to let a story like that slip?
Well, the part that's weird to me, Carl, is that if you were really Amazon planning to roll this out at the end of 2021, would you just be hiring your project leader now? And would you roll something like this out at the end of the year when Q4 is, I mean, that's the playoffs. That's the Super Bowl for Amazon. Wouldn't you wait until January, February when things calm down a bit to roll out something like this in beta form, test it out, and then have it all set by the second half of the year? I don't know. It seems a little fishy to me, but we will see.
Indeed we will. Guys, still to come, Robinhood bets on retail investors as it prepares to go public. More details from their weekend roadshow straight ahead. Tech Check is just getting started. Let's get a gut check on Zoom today. B of A names the stock a top pick, says the company's merger with Five9 is a game changer for the sector. And with $5 billion in cash, operating margins in the high 30s, says it has more opportunity to do M&A and outspend competitors. Zoom is the biggest gainer on the NDX this morning. As you can see, it moving better than 2.5%.
Meantime, Robinhood teasing retirement accounts and crypto trading during their IPO roadshow. Kate Rooney has the details. And Kate, a fair amount of randomness in that IPO roadshow as well. Like, what's your favorite planet? I actually just Googled if Pluto is still a planet. I don't think it is.
Exactly. It's not. Well, I'm told he was joking about that one, but the astronomy question felt kind of out of the blue, and they did get to pick those out of thousands of questions. But we did get some hints about the future of Robinhood towards the end of that virtual session on Saturday during Q&A with Robinhood customers. CEO Vlad Tenev saying that the startup is considering expanding into retirement accounts with IRAs and Roth IRAs. He also says they're working on cryptocurrency wallets so customers can hold their own digital assets. Robinhood executives talked up Robinhood more as a single money app, as they described it, not a brokerage firm. And they focused on areas outside of trading, including adding more savings and spending products. Executives also highlighted those as ways to diversify the business away from transaction-based revenue. That still makes up more than 80% of revenue for Robinhood. Payment for order flow also came up a couple of times. CFO Jason Warnick saying that if regulators go so far as to ban that practice, Robinhood and the rest of the industry will adapt and, quote, will explore other revenue sources. The management team chose the questions, as you mentioned, Deirdre. They say they had thousands of submissions. Tenev also appeared to be reading from a teleprompter during Q&A. They picked at least one question that had nothing to do with the IPO. A user asked what Tenev's favorite planet was. Robinhood is setting aside up to 35% of its shares for retail investors. The company is expected to list on the NASDAQ this Thursday. Guys, back to you.
All right, Kate, thank you. Reading from a teleprompter. Is that so bad? I don't know. I'd allow it. Okay, thanks. Speaking of that long-awaited Robinhood IPO, let's bring in MKM Partners Rohit Kulkarni. Rohit, my main question watching this IPO is, what is this company really going to be when the dust settles? Because so much of the surge in growth had to do with a kind of risk-chasing activity that even Robinhood doesn't seem to expect to continue, especially when they're talking about savings and retirement accounts.
Hey, look, I think all the fintech companies want to chase a couple poster childs out there, be it Square or PayPal. They want to use their user base, engagement with those user bases to add on more layers to growth, add on more layers of monetization. Robinhood has trading as their first foot in the door. They are adding crypto, cash management, 401k, IRAs, what have you. Whether they will be successful and how that translates to monetization is is to be seen. I think there is going to be a lot of choppy trading near term, John. I feel similar to many of the recent fintech IPOs, be it Coinbase, Marqeta, Affirm. There's going to be near-term choppiness. But if you are a believer of kind of how millennials would behave over the next, call it 2 to 4 years, then there is probably opportunity. But near term, I think a lot of people on Wall Street are going to be wary of this.
So, Rohit, the company is talking a lot about IRAs. They're talking about encouraging financial literacy, investors to hold on for a longer term, but that's not how they make money, right? Their revenue comes a lot from crypto and options traders. Do you think that investors considering this IPO understand that dynamic? Is it sort of conflicting for Robinhood to talk about these trends, longer term holding, when they do make a lot of their growth through shorter term trading?
Yes, as in there is definitely there are two issues here, in my opinion. One is like a perceived conflict of interest, and then there is a perception of lack of disclosure or lack of transparency. I think if anyone saw the roadshow on Saturday, CFO tried to answer that without giving a very clean answer or giving a very clean explanation about what the future business model would look like if payment for order flow comes under more scrutiny. I think in the meanwhile, I feel a lot of believers would want to hope and pray that there is no clear disruption in the near term. So that is what bulls on Robinhood would have them believe, as in payment for order flow and the unit economics. They get about 2.5 cents for every $100 order. If you believe the argument that this is a good thing for small ticket orders, which otherwise would have costed a lot more than 2.5 cents for every $100. So I think near term, I think you need to believe that there is no disruption in payment for order flow. Longer term, let's hope and pray that they add more levers of revenue drivers.
Yeah. Rohit, you've done some work here. You point out that they're coming to market at a time where the street is really building in models that look at serious deceleration in comps among its peer group. And I wonder how you think that might affect early trading once it comes public.
In my opinion, I feel people need to model in serious deceleration for this company too. Add to the fact that they have Dogecoin and crypto in there. For example, almost 10 to 12% of the revenue is coming from a single currency. So I feel as you look ahead next couple of years, this is probably going to lapse significantly tougher comps. That's going to add to sentiment reversing on the stock a little bit. So long as you can look through that tunnel, I feel right now people may not be willing to look through that tunnel of sentiment reversal to a certain degree. So again, right now we feel that this company, if this company grows more than 20% next year, if they can provide some level of confidence that they can do that on top of very tough comps right now, then this is a buying opportunity at the IPO price. Right now, from what we see, it is going to be a very hard sell.
Yeah, well, we will see how that early trading goes in just a few days. Rohit, thanks so much for being with us. Rohit Kulkarni from MKM. John?
Still to come, Tesla reporting after the bell today. We'll break down what to expect. Plus, Anthony Pompliano as Bitcoin got really close to 40K late last night. Stay with us.
Welcome back to Tech Check. Resetting here at the bottom of the hour. I'm Carl Quintanilla with Deirdre Bosa and John Ford. In just a minute, we're going to break down what to expect from Tesla when they report after the bell. But first, let's get a news update with Rahel Solomon. Hey, Rahel.
Hi, Carl. Good morning. And here's what's happening at this hour. New home sales posting a surprise drop in June, falling 6.6%. Tight home supplies and high building material costs continue to fuel price increases. It's the third consecutive monthly sales decline. May figures were also revised lower. Shares of Hasbro surging 10%, the toy maker more than doubling quarterly profit forecasts, helped by strong margins and rising digital sales. Hasbro's on track for its biggest one-day gain since March of last year. And defense giant Lockheed Martin is one of the biggest losers in the S&P 500, down about 3%, a rare operating charge in its aeronautics unit, causing some concern. That's despite Lockheed raising full-year earnings guidance. And a $30 billion merger has been called off. Aon and Willis Towers Watson have scrapped their deal to create the world's largest insurance broker. Last month, the Justice Department sued to stop the merger. Shares of Aon are up about 7% right now. Willis stock is down nearly 7%. You're now up to date. Carl, I'll send it back to you.
All right, Rahel, thanks very much. Tesla, as you know, set to report earnings after the bell tonight. Shares are in the green today as Kathy Wood argues the Wall Street doesn't understand Tesla's long-term potential. Our next guest says Wall Street's actually underestimating Tesla's long-term risks. Joining us this morning, author of Ludicrous, The Unvarnished Story of Tesla Motors, and host of the Autonomicast podcast, Ed Niedermeyer is with us. Ed, welcome back. Good to see you.
Good to see you, Carl. Thanks for having me.
It's going to be an interesting print, given all of the tentpole signs we see of encroaching competition. Lucid's trading today. I know you're watching Mercedes. What do you think they're going to say? What do you think they need to say?
Well, I think they need to shore up some confidence around sort of what's happening with the 4860, their new battery form factor, their new structural pack. I think there's a lot of questions about that. They raised a lot of hype about that around Battery Day, which was a while ago now. And the signs that we've gotten, or the guidance that we've gotten from them since, has been a little bit hard to read. So I think that's definitely one area. And then, of course, just Europe is on fire right now. Both sort of how things are going there and really what the plan is besides just building a factory. I think thus far we've heard, sort of like the idea that this factory will just sort of solve all their problems in Europe. And they really need to make sure that they're making the most of that market while it's as hot as it is.
Right. Their standing response to any sort of competitive question for years now has been, look, the more entrants, the better. It feeds awareness. It feeds adoption. It's a flywheel for the entire industry, and that will help Tesla. But as we start to talk more and more about share, I wonder which competitor or would-be competitor you're watching the most right now.
Well, Lucid just went public, and I think they're one that I've sort of watched for a while because I think they have a really interesting positioning in terms of being very similar to Tesla in a lot of ways, but kind of being a little bit more of an unabashed luxury brand. I think a lot of people who buy Tesla are buying for the status, and really with Tesla they get the status, but they don't get sort of the comforts and the creature comforts that sort of a luxury car buyer is looking for. And so I think Lucid is interestingly positioned there. But actually, having just sort of had our first chance to look at the Mercedes EQS, I think that is actually going to be a really, really tough player in this sort of premium and increasingly luxury EV space, just because it brings so much to the table that Mercedes has and that startups simply can't really compete with.
Right, but Ed, you're talking about models that are still unproven. Lucid's CEO, when he spoke to us, couldn't or wouldn't, confirm manufacturing targets for this year or next year. And then, you've also looked at the problems that GM has had with Chevy Bolt. At least Teslas are out on the road. They're, increasing. So what makes you think that the competitors are really on the heels of Tesla when they're still as to be yet unproven?
Yeah, listen, I mean, I think because Tesla has pulled off what it's pulled off over the last decade or so, our entire expectations around startup car companies are totally different, right? I think, coming from the auto industry, we've typically always sort of gave any form of startup, really, really long odds of even getting to production, right? And now with Tesla, we've seen that's possible, right? It can be done. The startup can come, but obviously, I think also if you look at Tesla's history, and I was actually just reading Tim Higgins's book that's coming out, and it was just a great reminder that Tesla had to do so much. They had to pull off so many tricks and frankly bend so many rules. And it was just such a chaotic thing to get to where they are today. I think it's really important to keep that in mind, both when you look at Tesla, right? When you look at the numbers, you have to remember all these details of what they've had to do in order to sort of pull these numbers off. But then, of course, also applying them to the startup competitors. But that's also why I think Mercedes is especially scary, is that EQS has a lot of the things that we're seeing from the startups in terms of a fresh platform, a clean slate approach to the product, but they've got also all the resources that Mercedes-Benz has, and that makes it really formidable, I think.
But Ed, here's what gets me is that it seems like Tesla has this advantage that maybe we don't talk about enough, where it's luxury yet attainable. I mean, my kids, my oldest is just barely a teenager. They know who Elon Musk is. They know what a Tesla is. They feel this pull toward it, like the PS5 or something. They don't care about a Mercedes, right? So there's that kind of halo effect that's going on, and investors haven't brought Tesla to this point based on whether it does the blocking and tackling around a particular vehicle launch, right? It's more about that overall brand strength.
Yeah, no, absolutely. And I mean, right, like for years now, Tesla has had all of these really, really fundamental challenges. Again, when you look at sort of what's happened behind the scenes at this company and you have those sources telling you, what things are really like, it's easy to be super pessimistic because they've been doing a tightrope walk for so long. But you're right, in the outside of reality, when you just look at the sphere of public perception, they've done just an amazing job at sort of building this really, really powerful brand. Now, I think that the challenge here is that, Tesla only has so many tricks in its bag of tricks. And I think when you're seeing now with the refreshed Model S, I mean, this is not a vehicle that looks fundamentally that much different than it did when it first came out in 2012. So they don't have the resources to completely reinvent that flagship vehicle all the time. Whereas Mercedes really did. They didn't just take an S-Class and put some batteries in it. They reinvented a brand new vehicle for that electric flagship, the EQS. And I think that's, to me, sort of the sign of, how does now Tesla keep up with that? And I think in particular, when you think about things like full self-driving, which has become a really, really toxic drag on the company's perception and faith in Elon Musk in particular, which is so central to that. I think that there's, some real challenges. I would not expect the same kind of, smooth sailing that they've had so far, even in the realm of just public perception.
Wow, interesting. We're definitely going to find out what advantages some of these legacy OEMs may bring to bear as this fight continues. Ed, great stuff. Good to see you. Thanks so much. Ed,
yeah, thanks for having me, Carl.
And Carl, we talked about cybersecurity names earlier on in the show with John Chambers. Loop downgrading a couple of names in this space this morning. They take Palo Alto Networks and Zscaler from buy to hold. Says Splunk is perhaps better positioned vendor to benefit from changes in the security software spending space. Take a look at these shares. They're lower today. More Tech Check after the break.
Back to, are they money market funds, right? The comparing any stable coin, mechanism or product to a money market fund. If they were money market funds, then they would be regulated that way. And maybe regulators in the future determine that they are. But as of right now, they haven't determined that. And so, I'm not here to kind of serve as the defender of any of these platforms.
That was Pomp Investments' Anthony Pompliano on the scrutiny of the reserves backing stablecoins, including Tether. Now, they are not held to the same transparency standard as money market funds for now. But as we have discussed here on the show, officials are increasingly calling for more regulation of stablecoins. And Tether also back in the headlines this morning as Bloomberg is reporting that Tether executives could be facing a criminal probe into bank fraud. We have reached out to Tether for comment, but have not heard back just yet. Reminder, Tether is the third largest cryptocurrency by market cap, some $63 billion worth in circulation, and its trading volume is nearly double that of Bitcoin. In that live stream last week that we've been referring to, Tether executives, they were evasive. We didn't get any answers about what makes up their commercial paper, which makes up the majority of their reserves, or when we might finally see an audit. Have a listen.
Our portfolio contains international commercial paper. As you noted from our public disclosures, it is overwhelmingly rated A2 or better. And we think that's the key thing here. And we think that transparency with the market and how the market has spoken and decided here is what's really important.
So, John and Carl, as we've been talking about this in the past, I mean, scrutiny of Tether has been on the rise for years now, but it has just become so much more popular. Its role in the crypto economy, so much more critical over the last year or so. As I mentioned, a $63 billion asset now, and still a lot of questions around it, such as, is the commercial paper from China? Is it from different countries? And that's important for us, financial reporters that look at this market. But Anthony Pompliano made the point as well that it may not matter to the people who are actually trading Tether, using it to trade Bitcoin and other cryptocurrencies. And that's perhaps why we haven't really seen any movement. This is a stable coin. It's still worth about $1 US because of its function in the economy. But this story, I think, is far from over.
Yeah, I mean, as you have zeroed in on, Dee, in your reporting, if there is systemic risk within crypto overall, from Tether, it's important to focus on and understand it because people don't care about it until they have to care. Well, as you've seen, Tech Check doesn't start at 11 and doesn't end at noon every day. You can get more exclusive content online. Tonight, I'm doing a Fort Knox deep dive after the Intel Accelerated Technical Event. Technology analysts Pat Moorhead and Kevin Krull are going to join me to quiz Intel SVP Sanjay Natarajan on the company's competitive position. You can see Intel there up about 2% today after a big fall after earnings last week. And that conversation, Fort Knox Deep Dive, starts at 6:15 p.m. Eastern. Now, after the break, we'll have the CEO of BioNTech. Tech Check back in 2. Cloudflare taking aim at AWS. In a blog post on the company's website, CEO Matthew Prince and Senior VP of Global Infrastructure Nitin Rao point fingers at Amazon, taking issue with the company's bandwidth charges. Using AWS's own price calculator and assuming 20% utilization, they estimate that American, Canadian, and European customers pay 80 times Amazon's cost of operation. They also note that Amazon only charges for data transferred out of their network, accusing the company of keeping prices high because they know it's hard for customers to leave, writing, quote, "So much for being customer first." Prince will join us tomorrow on Tech Check to discuss cloud infrastructure and how smaller businesses can compete with the likes of Amazon and Microsoft. And of course, they are competing with Amazon and AWS as well. So all of this in perspective, Carl.
Indeed. We talk about competitive regulation and antitrust and all of that, but it's good to have smaller companies, at least arguably, John, trying to keep prices at AWS and other companies in check.
Yes, indeed. And Dee, as we look at how Cloudflare tries to compete and just internet infrastructure overall, so many companies have come to rely on it. When there are outages like we've seen at times, it becomes business news.
Mm-hmm. Yeah, and there's more competition than ever as well. And to Carl's point, you're seeing more and more of these small companies speak out against the tech giant, whether it's Google Search or Amazon AWS. Matthew Prince, I know a few weeks ago, he tweeted out in defense of Shopify saying, to Toby, trust the real rebels like at Toby, the CEO of Shopify. Never trust Amazon. So it's becoming increasingly popular, or perhaps comfortable, John, for these smaller companies to speak out and perhaps get the attention of regulators. I'm sure they know what they're doing.
Yeah, when you're the lead dog, you take shots for sure. Meanwhile, we're going to head to break. Major averages all in the green, but barely. A lot more Tech Check straight ahead. Stay with us.
Welcome back. Let's get over to our Meg Terrell, who joins us with some news on the vaccine front. Hey, Meg.
Hey, Carl, BioNTech, which of course co-developed the Pfizer COVID vaccine, now saying it's going to put its mRNA technology to work trying to fight malaria with a plan to get a program into human clinical trials by the end of next year. Joining us now is the co-founder of BioNTech, Chief Medical Officer, Dr. Özlem Türeci. Dr. Türeci, it's great to see you. Thanks for joining us. Tell us about how you think mRNA can succeed here when we've seen so many try and fall short in malaria.
First of all, thank you, Meg, for having me. mRNA technology has experienced a baptism of fire with the COVID-19 pandemic and the success of being able to develop a vaccine there. And in this context, we have learned a lot how to use this technology to address difficult pathogens with regard to inducing a very potent and multi-layered immune response. And we think that this potency of inducing an immune response can be also used against the malaria pathogen. This, together with the fact that we could show that the manufacturing can be upscaled easily and development is fast, is a very good path forward also for malaria.
Well, another part of your efforts here in malaria are to establish vaccine manufacturing production in Africa. There's been so much focus on this in terms of vaccine access for COVID-19. What is the pace of being able to establish this manufacturing footprint there, and could it help with COVID?
Yes, absolutely. And in principle, it's sort of the contrary. The COVID-19 vaccine-driven establishment of manufacturing capacities in the African countries will help to prepare for a potential malaria vaccine. And with regard to PACE, we try together, and this is a joint effort of many parties, including, for example, the WHO, the Kennard Foundation, the African CDC. We try together to be as fast as possible and ensure that technology transfer with all its multiple layers, including, for example, educating the required workforce, establishing the infrastructure, finding facilities which already have the quality which is needed.
It's important. I want to ask you also about the COVID-19 vaccine that we currently have. Some evidence emerging from Israel suggesting immunity starts to wane perhaps about 6 months in. How are you looking at those data and how immunity is holding up with the COVID vaccine?
Yes, we have to continue to collect the emerging data, and it is emerging fast. Israel has been one of the first countries, basically, which started early and had a high immunization rate also very early on. So it's important to take the signals we get from Israel as serious, but also continue to collect further scientific data from our collectives, other collectives.
All right, Dr. Terenci, thank you so much for joining us. We look forward to seeing all the uses to which you put mRNA. Thanks again. Deirdre sending it back.
Thank you. Thanks.
And Meg, thanks for bringing that to us. Don't forget to subscribe to the Tech Check podcast. Catch us anytime, anywhere, available everywhere you get your podcasts. Tech Check is back after one last quick break.
It is a big week for tech earnings and earnings in general. A note that last quarter, big tech names brought in over $300 billion in Q1, a 41% increase over the same period last year. Per Reuters, the FANG names recently stood at nearly 25% of the S&P 500's market cap. We're going to be looking out for quarterly ad revenue growth and daily active user numbers for names like Facebook. A lot to look forward to this earnings season, guys, as we await those numbers. Of course, Tesla tonight and much of those big tech names coming up throughout the week. John, this is definitely peak earnings season, but it's amazing when you get these giants thrown on you. Just look at the lineup for Tuesday and Wednesday night.
Oh, yeah, for sure, Carl. I'm going to be handling Microsoft and Qualcomm this week. Microsoft, really curious about those overall enterprise spending trends by geography, as well as cloud capital expenditures. That has implications for a lot of names in the sector. And then Qualcomm, you know, we've got a new CEO over there, though he's been there for a long time. Dee, we'll see how smartphones and the overall chip market, if they can continue to outpace these supply issues.
Yeah, I'll be looking at Alphabet and Amazon, covering those names really closely. And Carl, the fundamentals, I heard a few analysts talking about it this morning on CNBC. The fundamentals are strong when you think about the so-called fourth industrial revolution. The big tech giants, they are at the forefront, even with that Amazon headline, if it ends up being true or not. But looking into crypto, they are at least looking into it. So that'll be interesting to see if they mention anything else.
Yeah. Meanwhile, JP Morgan says the peak in UK cases may be behind us. You've been listening to CNBC's Tech Check. You can always catch us live weekdays at 11 a.m.